Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the financial markets in this last day of the current year. So today, as we said in our weekly report, we will take a look at the British pound because the short-term setup on the euro we have discussed in the weekend. So in general, on the weekly, I just would like to say that the euro is still struggling with daily resistance. So if you remember, here was rather strong resistance, so that was the upper bottom and fib level, and we said, well, hardly market just freely will pass through it. Although the major retracement has not started yet, but you could see here definitely some problems with the breakout of this level exists. So market is struggling with it, challenging it, but can't pass through it. So, and I do not expect that will happen just very soon. So hardly it will happen today as well, because this level in general strong, but theoretically, the fact that market doesn't show the strong pullback here and is trying to pass through it through this strong resistance in general confirms bullish ambitions of the market. So this is good. On the Great British Pound, we have a bit different setup. So if in euro we are watching for upward continuation, on the Great British Pound, at least due to the patterns that we have on the weekly chart, on the daily is huge engulfing patterns, strong resistance in weekly overbought. Well, we suggest some additional continuation to the downside. We still think that here market could still show some kind of the A, B, C, top, D pattern before different action will happen. And from that standpoint, it's a bit difficult to combine setup on the euro, setup on the gold market that trades also in relation to United States dollar, and setup on the Great British Pound, because, well, in one or other degree, all of them stands in relation to the United States dollar, and in general, as a rule, they have the common features in action. So if we plan to see the upward action in the euro, it means that on Great British Pound, the downward action, well, could happen, but this will be not probably so strong, and maybe it's not obvious that this will happen. And from that standpoint, here we have a bit contradiction situation. But at the same time, in recent few months, we saw absolutely different type of action on different currencies. So if in the euro currency, we were watching for some flat action, retracement, narrowing of the trading range. On the Great British Pound, we see a really fast rally up, based on the background on the political events, and then the same strength downward collapse. But on the euro, this time we saw opposite action. So the euro has started the upward trend. Well, maybe this some divergence, let's call it in this manner, will last for some time, at least one while on the Great British Pound we see the reaction of the market on this recent collapse, and then maybe they will start to move with more agreement to each other. But currently we're still watching for second leg of this drop, and currently in the current situation we do not see reasons to deny this idea. So we do not see any signs for the market that could tell us the opposite, that market erasing this drop and starting to rally to the upside. Because recent statistics in Great Britain and the United Kingdom shows that overall sentiment, economical situation becomes worse. Investors and analysts expect just anemic growth if we will get any in the United Kingdom this year, and despite the Brexit euphoria, it's really exists some difficult moments in the economy. It should be the country should overcome in the nearest years. Another question is still around the Brexit. So you know that Boris Johnson said that today's day the final day to make the final decision, and it's really investors are worrying that this stubborn idea really could lead a country to hard Brexit as well. So although the probability of that is not really significant, but that's just the things that stand in the minds of the investors right now. Well, in a shorter-term perspective, if we take a look at the daily chart, we're still watching for this pullback. And it seems that market is coming somewhere to the moment where theoretically the downward action should continue, because this retracement stands significant. As you can see, it has started, it has finished, this drop has finished right at the level that we have specified, 29.19, so the market has broken for the confluence. Here we said, well, it seems that it's tending to the major trade support, and indeed, once it has reached it, it immediately turns up. So retracement right now, it seems it's coming to some logical point, at least to the level where a theoretical market could show the reversal. You take a look at the 4-time frame chart. This level also was 127 extension of this rally on the elections result. So we have talked about in our weekly reports as well. As you can see, this XA action is 127 extension. Market has reached it and turns up immediately. So currently market stands at the resistance. So you can see that stands at 131.37 area. Here we have some acceleration, which tells that, well, maybe it could be a bit deeper action, but probably some reaction on this level still could happen. So maybe we'll get some kind of ABCD action. That's more probable than real upper continuation here. Still, we could keep an eye on this top, this minor top, around 30% resistance that has been formed, because here actually we already have bearish pattern. So take a look. Right at this point, we have a few patterns. First of all, on our chart, this is ABCD extension. Market hits the XOP, which creates agreement with the resistance, so it's relatively strong level. You can see the reaction of the market already on this resistance. Market is forming the bearish divergence right at the agreement resistance on the 4-time frame chart. And here is minor 3-drive sell has been formed. So take a look. First drive, 127 stands 127 of the first. Third drive stands in the combination crossing of the 1618 extension of the first drive and 127 of the second. So if you put extensions here, you will see this. I just would like to keep chart as clear as possible. So, and you can see that right at the third drive, this 3-drive pattern finalizing the ABCD extension. Right, leads market to the XOP. So that is, in general, good setup that could be used for taking the short position. This setup will be valid until market stands below the stop, because if market plans to reverse or to show at least some retracement, some pullback here before the next leg up, it should keep this target level intact. Why? Because in this upward action, market already has completed all necessary target. It has no necessity to move higher, except only if it intends to continue upward action. So if retracement stands on the table, this stop should hold. If not, well, in this case, market probably will break it and goes continue upward action. So minimal target of this 3-drive pattern, these lows. So market should take out the lows between the second and third drive. But I suppose that will be some greater pattern to be formed here. This will lead to either reversal down with our daily setup, or just pull back here up maybe to the 30% support, maybe even lower, before the next upward action will happen. So currently, in 2 words speaking, we have on the table 2 possible scenarios. First is immediate reversal and downward action on the daily. Second, a kind of the ABCD pattern here, getting 3-drive sell, triple 2 sell. Triple 2 sell pattern and then downward continuation. But anyway, right from this point, it should be some reaction, either reversal or some retracement here. This immediate upward continuation will also possible, but well, I still hope that will be some respect to this level. And currently, as you can see, market stands very close to invalidation point, so placing stops somewhere above this area for 40-50 pips will be enough to take part in this trade. Of course, if you would like to take the positions for the weekend, for the holidays. Well, at least from the theoretical point of view, this setup is interesting and something to keep an eye on. That's what we have on Great British Pound right now. So, Forex Peace Army, I wish you a Happy New Year. See you next time, I suppose, on 3rd of January, because on the 1st and the 2nd markets are closed in the United States and Europe, so probably nothing will be to talk about. But on Friday, I suppose something new will be formed, and we will return back to our daily updates.